Hello, everyone. Welcome back to a new episode of Decoding Market in Three Moves with none other than Mr. Rohit Srivastava, India's renowned market strategist and the mind behind Indiacharts and Strike.money. So, without any delay, let's get started with today's episode. Welcome back, sir, to a new week and a new episode.
Pleasure
So,
to.
how is the market scenario right now?
Oh, I should say what a weekend it has been, and it's not the first time. So on Friday, I was telling people that just wait till Monday morning. By then, everything will be gone. And then I was actually doubting my own words because I was saying this time it sounds a little more serious, but it's just the same thing again. I don't know if it's orchestrated that way that after all markets close in the evening, some announcement comes. Over the weekend, Bitcoin, everything reacts. People dream of dreams. And by Monday morning, it's all cleaned away like nothing happened. And that's what this weekend was. We got lots to talk about. Like Donald Trump, hate Donald Trump, Antichrist,
Right.
whatever.
So, let's get going with the questions, sir.
Yeah.
Uh,
The weekend entertainment is
start,
over.
yes. So, starting with the long-term resilience. So, starting with the rupee, because as you said, Donald Trump or rupee ka scene bhi chal raha hai. So, how can periods of rupee depreciation create opportunities for economic reforms and long-term resilience in India?
Well, weakening of the rupee has nothing to do with economic reforms per se, unless it's a crisis. I mean, the 1990 reforms did happen because of a currency crisis, but I don't think a similar type of currency crisis is anywhere close because we still have $600 billion plus of reserves. At that time, we were out. We actually had to send our gold to the IMF and ask for money, and then they said, if you do reforms, here's your gold back. Go do all this stuff, and we did. And here we are now sitting on reserves. So it's a tricky thing to think about reforms being related to currency. Uh, but we do have a problem. Like our currency always weakens because most of the currency is being financed by some FDI, but a lot of FPI. So what can we do about FDI? How do we attract foreign money? Is a constant question. It's not a new one. Uh, that will get addressed only by some devaluation. And devaluations are now part and parcel. Every country is devaluing around the world. So it's more like economic policy. It's not even like, oh, it's that bad thing. No, it's a good thing. Countries are doing that to boost their markets now.
Got it, sir. So it's it's actually rebuilding the main basic infrastructure or the baseline. That is what devaluing
No, building,
does.
it's just creation of money. Now, of course, where you spend it is a different thing. So if it's creation of money through government spending, it has a positive economic impact.
Okay. So moving to the next
But that positive
burning.
impact, just to add, that positive impact comes
Yeah.
with some amount of inflation.
So
So
if
that means that we have to live with some amount of inflation. And
got it.
uh, there is an inflation hedge, which is to buy equities.
That's right. So moving to the second question, and that is also a burning topic right now. It's regarding the silver. So what are the key long trend, like long-term trends and wave pattern observed in silver price movement since 1985, and how do they indicate the progression into wave three?
So we are somewhere in the advanced stage of wave three, which means we are in the fifth wave of three, and that is why it is going parabolic. But when you're going parabolic, it's not over till it's over, and when it's over, it will be over for good.
Hmm.
By for good, I mean for 6 to 12 months. And because it's only a third wave, the fourth wave will just be that 6 to 12 months long consolidation phase, and then you'll have another wave after that. So, in short, the bull market in gold and silver is not over, but it is overbought and it is stretching at the same time. And so, the only thing, there are two questions to this. Do I buy more now, or do I exit what I have bought? For a trader, you have a trailing stop loss because you want to keep riding it till it reverses and make the most out of it. So get a good trailing stop loss for yourself. Learn how to put a trailing stop loss. We can teach you in the mentorship program. And then for long-term investors, it's a little tricky because we are at a point where eventually after the peak, who knows, we'll come back to this level. So at least on a 12-month basis, I don't think you can get more significant returns from precious metals. I could be very, very wrong about this. Okay. But I think it's time to shift back to equity from gold and silver. If you did that a year back, that was the right thing. Like last year, December, Jan, I think I did mention in a couple of interviews, it's time to raise your weightage in gold and silver for some time. At that time, I thought sometime means 3 to 6 months. Now it's become almost 8 months, 9 months, 12 months, maybe almost 12 months in 2 months, so 10 months at least. But we are getting to the point in the next month or so where it will be the time to do the shift back. Or maybe you should start doing it now itself. If you're someone who does that kind of asset allocation. For most people, gold and silver and equity are completely two different asset classes. They don't really do this shifting stuff. This is only done by portfolio managers in the West. In India, it's a very limited scope of people. We buy gold and silver and just put it in the vault. I mean, put it in our cupboard or put it in the bank or put it somewhere. We don't consider it as part of our, equity exposure or, investment exposure. We consider it as something that we want to accumulate and keep,
Right.
which is not
So
bad.
this
But I'm just
this is
generally
very
saying
true.
that, I'm just generally trying to say that from here, next 12 months, if you're not in equities, uh, then you've missed the boat.
Right.
Gold and silver outperformed equities last 1 year. I don't think they will outperform equities next 1 year. The
So
tide is about
this
to
is
change big time.
so but it's very true that people here in India, like unlike West, in West they actually treat gold as such a commodity. They trade in and they trade out. That's all. Whereas in India, gold carries also sentimental values for Indian people. So yes, that is also a thing that many of the people are not actually associated with gold in terms of commodity basis or in terms of trading it down for equities. So yes, that is also a very very rare thing we see in India. People once they invest in gold and they actually keep it for long. They actually believe that some assets they think that it's creating an asset in the long term future, but they are not
By
actually
long,
creating it.
by long, when you say long, it's generational.
Ah, yes, right,
It's not even like
right.
10 years. It's
It,
like
yeah,
I'll
true.
accumulate it and hand it over to my kids. It's like that. And then they will
Right.
pass it on to their kids or something like that. Who
Yes,
ever heard of selling their gold and silver? No such thing.
true. So let's get back to the questions of. Moving to the next question. How does moving to the Nifty one actually right now? How does the Nifty hourly RMI turning bearish affect the likelihood of lower lows, and what key level should traders monitor to anticipate further downside?
The RMI is not turned bearish. Where is it turned bearish?
Yeah, it is. I think so. Just a moment.
On which chart? Hourly.
Yes, sir. Hourly.
On this program, we should not be discussing hourly charts. I'm just joking. So that is just a one day view. Now, if I look at the hourly charts, let me open Strike. So anyone who wants RMI, this is where you get it. Strike.money. Can you see my screen?
Yeah.
So we
Yes,
go to
yes.
Nifty 50 and I click on daily. If I want, I can go to hourly, but the hourly RMI went into sell. The RMI came back down. Okay, it's now sort of picking up from the zero line a little bit. And it did not fall below what you see here is this blue line, 40-hour average. Now, even if it does fall a bit, I think maximum it falls still here, 25, 160 or something like that. But there's no trend reversal. So hourly charts just, okay, they just give you a point of risk management, which was from today morning, but it went sideways. It could have gone down. It just went sideways and the momentum came off. But the higher time frame always plays the bigger role, right? The higher time frame says we are bullish. So therefore, it is only a waiting period ki when the hourly cycle will complete and give you a fresh buy signal, because the daily is bullish. But yeah, there is a catch here that the weekly has been bearish for since July, and it has not yet turned bullish, and it's on the kissing point now this week. So by this weekend, by Friday, when we do our final session for the week, we should be able to decode a buy signal on the Nifty weekly, which is already happening, I think, on the, it's already happening on the Bank Nifty weekly. Happening meaning, again, it will be known by Friday, but you can actually see the cross happening. Whereas in Nifty, it's like still at a kissing point. In Bank Nifty, it's actually showing like a crossover, but it has to stay like this till Friday. So interesting. So now with that, the daily and weekly will both have aligned to the bullish side. Okay. The hourly is just an intraday thing. Like the hourly is relevant only till we don't break a certain level. In case of Bank Nifty, that's probably 56,200, and in Nifty it's probably 25,100. Unless those levels break, the hourly sell signal is not relevant.
Got it, sir. So before moving to the next question, I just want to make an announcement for the viewers over here who has joined our live from Twitter. You guys can also post down your comments in the live chat so that we can pick your comments as well. Because we can see that people are posting their comments from YouTube, but we have a very large audience joining from our Twitter channels or handles as well, from both Strike.money and our Indiacharts platform. So you guys can also actually share your questions.
Yeah, it's on the right hand side. I saw the other day when I clicked on the video. The right hand side has a comment section where you can post your questions. And if you're not able to, if there's a technical issue, then do let us know directly on X so that we can look into it.
Yeah.
But we were getting them earlier, so I guess it's not a tech issue. So really wonder
So
what is
if you guys have joined from phone or any other devices, so you guys can actually go in the live chat and can post your comments right away. So that's it from my side.
Yeah.
So you're checking it right away.
I'm also checking. Yeah, if there is, it's telling me Rohit Srivastava is live. Join. I've joined. Now the thing is, in this, where do I actually post the question? Okay, so on the mobile app, I think it's slightly difficult.
Just a moment, I will help you guys.
So there is an arrow button. Maybe that works. Or is that for sharing? Ask.
So there is a over here live chat option. I can show you guys.
What is it?
So there is a over here live chat option. I can show you guys.
Because I'm not able to see a chat option on my live. Okay, we probably need to figure that out later on.
I can show you guys.
So let's go with, okay, now I went back into it so I can see a say something at the bottom. I don't know why it was not showing earlier.
Hello.
Okay, that's tricky. So there's
Yeah.
a say something at the bottom of the app down here. So so I think I went back into it so I can see a say something at the bottom. I don't know why it was not showing earlier. So I've just put a hi. Yeah, there it came. So yeah. Anyway, let's take it on.
Sure. So moving to the last question for today's session. How a global supply shortage and rising industrial demand influencing the record high prices of silver, and should investors consider buying, selling, or holding their silver investment in the current market scenario?
I think I answered most of that in the earlier question on silver.
Yeah,
And as
but
far as industrial demand is concerned, it is all hyperbole, meaning it is all future. I mean, I have spent a decade hearing about this silver demand that will create a silver shortage. It has still not happened. So there's a lot of theory. Okay, it's used in chips, it's used in solar panels, but it all depends. So I will not extrapolate that too much. I think it's all just part of the commodity cycle and the reflation trade. Uh, and somewhere it's investment demand more than industrial demand that is playing a role as far as precious metals are concerned. But yeah, the industrial angle has always been there, but I'm not sure that has caused the shortages yet.
so that's all for my side, the questions. So let's get going with the questions of our viewers,
Hmm.
starting with the first question is, so
If
if
Nifty
Nifty
goes
holds 25,
25,100, can I expect an all-time high? Uh, yeah, I think I will agree with that.
so moving with second one is from Jay Hans. In
In
silver,
silver,
huge
huge difference in
difference.
spot and future price. How do you expect it to resolve? So some people read a lot of articles. Oh, this is not the normal. There's another problem. I also heard about the ETFs premium spikes. Now, see two different things that happened. ETFs, trading at a premium and futures trading at a discount. The premium is excessive demand. So even when gold and silver fell last week, the ETFs were going up on certain days. So surely the demand is outstripping supply. That's on one hand, and that's physical, okay? And in the futures market, when we look at a discount, it shows a short squeeze going on, which means there are a lot of shorts. Some people are coming up with stories of structural problem in silver market causing the futures to go into discount. I don't understand all that. I'm not so deep and I'm not so knowledgeable. I only understand if there's a discount, there are shorts. People are shorting it on every rise, thinking it's going up too fast and will come down, and are getting squeezed. And the premium in the ETF market shows that physical buyers and demand from the investment side is so high that it's outstripping that selling that is happening in the futures market. So it's basically the retail traders are taking out the big traders who are shorting silver. Very simple explanation for nonsense.
So moving with the next one. It was a good explanation actually.
Yeah, I mean, it just struck me while thinking about it, because I've been reading this ETF story over the weekend, and then when you tell, and then today morning I read about the discount, and I when you asked the question, I just connected the two dots. So it's not like I had really thought about it, but that's the only thing which makes sense.
Next is from the Bulls. So looks like kind of negative divergence is a Nifty monthly chart. One more point regarding DXY, as DXY looks bottoming out. Do you think metal stocks will hit the near time?
So we'll hit. The last line is a little confusing. Bottoming out. Do you think metal stocks will hit in near time? Will hit meaning probably saying will fall. See, it's opinionated, right? If you say the dollar is going to go up, then metal stocks can get hit. But whether the dollar will go up or not is a question mark in itself. Donald Trump is trying very hard to bring it down with rate cuts, with China news, with all of that, which has brought down bond yields. I think I'll give it a few days to see what the dollar index really does, because it's in a very tight weekly band and has not broken out of it. So I don't want to conclude. There is a good argument to say that this is a bottom in dollar, but there's also an argument which can go in favor of the dollar falling further. So while both the arguments are open at this moment, I'd rather let it confirm a little more. But if I just go by the broader odds that every central bank right now is in expansionary mode, that we cannot really expect uh, anything to happen so soon. So let's not jump on it, because see, somewhere gold and silver have given us the lead on that. The US talking about lower rates and the dollar may not have fallen so much, and eventually that rubs off into other commodities. It has not this time, is partly a surprise, but who knows when that impact will start showing. So let's not conclude. Let's just not conclude. Copper prices have actually been picking up from a support in the last few weeks. Even on Friday, they fell to the 20-day average and then are bouncing back today. We are seeing aluminium prices break past the last two highs. So a couple of interesting things happening. It's just not happening across the board in a big way, despite the expansionary China and US policy. But sometimes these things can happen all of a sudden. A lot of it has to do with some extent global demand, but yeah, all the stimulus should have helped. I think oil prices are a big play, because oil prices have a definite direct impact on inflation expectations that eventually results in people raising prices. And Donald Trump has taken a very strict stand on oil, and which is why he's trying to resolve everything from Hamas, which he did this week, and that is why you saw oil prices fall to a new low again. And he has been trying with Ukraine and Russia, which has not worked out so far. But if I look at the oil price chart, it looks like it still wants to fall some more, maybe another $5-10 down from here. Now, if I keep that in mind over the next quarter, that means that the runaway commodity boom might still not be around the corner. But at the same time, does that mean that the metal stocks will fall off? Because Indian metal stocks are doing well for reasons apart from that, which is domestic demand and a weak rupee, which the weak rupee basically helps in global metal prices. Even if they stay flat to down, they go up in rupee terms because of a weaker rupee. So you get a pricing advantage. Okay. So that is why I think Indian metal stocks are standing out against US metal stocks also in the near term. So let's not be in a hurry to call a top. In fact, uh, many metal stocks are looking at like a buy on this dip right now, even today on my charts. So yeah,
So
guys, you need
moving
to
to
be a
the
little more
last
optimistic
question.
in life. There's too much pessimism. Everything is about, will it come down? Will silver come down? Will metals fall? Only one person said if 2500 holds, then will we go to high? Where's the positivity? It will come only later.
So moving to another negative question.
Will Fed rate cut in the October meeting improve FII inflows into Indian stock market? No. Inflows into Indian market did not even improve when interest rates in the US were zero. So now at 4% or 3.75, that is not the issue. The issue is capital gains tax in India.
Yeah.
You do away with capital gains tax on FIIs, you will get $50 billion tomorrow. And you won't be able to stop the index. And government doesn't mind because domestic flows are so strong, they don't mind FIIs not coming in. But in the process, then we are taking the currency hit to your currency macro question at the start. So we are willing to take that hit because our domestic demand is so strong.
That's the reason they don't care if the FIA doesn't even come. They're like,
I guess
okay.
so. I guess so. Yeah. They're like, aana hai to aao. We are the best performing market. Pay tax. Why should we get a free ride? I mean, it's a fair argument. It's a fair argument. And if people are looking at FII selling to think stock market will fall, the last time I thought that way was 2018. Okay. But post-COVID, I have stopped looking at FII. I only look at FII positioning, which we discuss it in sentiment indicators, which is more to understand whether they as a crowd are bullish or bearish, and what does that mean for the market. But daily cash market buying, I don't even know whether they bought or sold on Friday. I don't even know. I have not even checked numbers. Like once in some time when somebody asks me, I open that FII chart and strike and see itna daily mein, weekly mein, monthly mein. Khatam. वो बीच में हुआ था ना 3 days it was green, so I was asked on CNBC, so I looked at it. Okay, 3 greens after a long time, because every time last time it was 1 green and then gone. So 3 greens in a row was like a green shoot. FIs are coming back. Forget it. Yeah. When they don't come back, who cares? Government doesn't care. We care because we wanted to go up on FI buying. Domestics are buying. You don't care. They are buying every day. FI should buy. Stock market is not ruled by the buying of one party or the other. It is ruled by sentiment. So if we all believe prices should be higher, somebody will buy at a higher price and somebody will sell, right? You cannot have a transaction without a buyer and seller. This is a basic essence that you have to understand. I think everybody. That no trade happens without a buy and sell. And this is best understood in real estate. So in real estate, a transaction is very slow. So a transaction doesn't happen till two people sit on a table and decide this is the correct price. But in the stock market, that's happening in nanoseconds. So we believe that there is a buyer who's driving the price up and down. Now, that doesn't mean manipulation doesn't happen. Like we do punch block orders and, buy all the way up and push up the price. I mean, that's a reality. I agree. But if somebody is doing that, there are also sellers who've given different prices. Now he's willing to sell at this, willing to sell at this, willing to sell at this, and somebody just came and bought everybody. So naturally, there was a buyer for every seller. It's not that you put a block order to buy 20 rupees up and there were no sellers. Then that order wouldn't even get executed. So there are sellers and there are buyers, and the guy is willing to buy up because he thinks it's worth more. So the markets are really, at the end of the day, a reflection of what you think real value is.
So moving to today's last question, we won't stretch this further. And it's actually a optimistic question. And that guy actually wrote this, putting up an optimistic question.
comment. I think Nifty has started wave 3 of 5 on the upside. Shall we expect 28,000 Nifty in the coming 3 to 4 months? So never put, like you may have heard this, never put price and time together, because see, time is an unusual aspect. Going to 28,000 in wave 3 of whatever is a certainty. In 4 months is not. It could happen in 2 months or it could happen in 6. I have no damn idea. I can only go by the direction. And once the weekly RMI confirms it, I will be a little more sure that it's coming. But again, we will not put a time on it. But we'll be at a significant place by January simply because the seasonality is such. Seasonality is usually bullish between now and Jan for equities. It usually peters out around the budget and then into Feb, March. So this is a good time for anything to happen.
So that's it for today's session, today's question and answer round. Uh, Thank you
By the
everyone
way,
for
did you
joining.
get all the questions or you
Sorry.
did? There was
Uh,
one, two, three. Yeah, you got them.
there were yeah, there were three more questions, but then it will be more lengthier. It
Yeah,
was
yeah,
basically
fine. You're done.
thank you everyone for joining and trade safe, use strike, and let's again meet on Wednesday, same time, same place. Thank you, sir, for your valuable time and answering every question, every pessimistic question, and making them into an optimistic note.
I hope I've been able to rub off a little bit.
Yeah. Thank you everyone for joining. Thank you, sir.
Thank you.